Hi everyone, welcome to Vantage Educational Series for today. So we are covering on price action trading, specifically on reversal patterns combined with price action. So I'll just give it about 1 to 2 more minutes for more people to join us before we kickstart the session. At the same time, for those of you guys who have any questions, please feel free to type them under the questions chat. So we will just give it about 1 to 2 more minutes. So for those of you guys who are here with us on Zoom, if you have any questions, please just put your questions under the chat box or Q&A box. I have both tabs open. If you're with us via the app, please just type your comments via the stream. Okay, so we'll kickstart the session shortly. Okay, so let's kickstart our session, So for those of you guys who just joined us, for today's focus, we will be covering on price action. So pretty similar to the previous sessions in terms of how it will revolve around market structures. At the same time, we will be covering on how this patterns coming into a higher time frame supply or demand areas, can show potential reversal patterns. So with that, let's take a look at what we have. So before we start, just a quick introduction of myself. I'm Lee Sing. So you can also find me on LinkedIn for those of you guys who are watching a recording of this. If you have any questions, please feel free to reach out to me on LinkedIn. If you're with us live, do put your questions under the questions chat. So just a quick disclaimer, the information presented here is not to be treated as investment advice. It's for educational purposes only. So this is the agenda that we will be covering for today, So first we will take a look at market structure and price action. So we'll cover slightly, or rather a brief touch, on supply and demand areas, given that today's focus is more on covering on reversal pattern, following entry into these zones, And of course, we'll hop onto our charts to take a look at a few examples. So throughout the session, if there are any technical issues, please do highlight them either if you're watching it via the stream or on Zoom. If not, if you do have any questions or specific chart requests, you can do that as well. So if you have any chat requests, just type your questions under the questions chat. Okay, so I'll just cover briefly first, for the benefit of those who are not familiar with market structure. I'll cover this, just so that we can get an understanding of how we can actually combine market structures in our analysis. So the idea behind market structure, there are three different types of market phases we can look at. One, it's uptrend, and the other, it's a downtrend. And then lastly, we have ranging markets. So in an uptrend, we see very clear successive higher lows and higher highs. So as what we see here, you can see that when prices are in an uptrend, it trends or it moves strongly to the upside, and the lows themselves are not broken. So this is an example taken from the trading view chart where we see prices in an uptrend. So in this example, you can see that the highs themselves can be used as constant targets, whereas the lows, when price pulls back into a demand area, these regions themselves can be reference for our stop losses. So one thing to note with this is that when price starts coming into this zone, you can see that when it does a pullback, so every pullback that we have coming into the demand zone, like this example here, we see that when price starts forming this pullback leg on the lower time frame, this pullback leg consists of a downtrend, essentially lower lows and lower highs. So how do we know whether price would mitigate or push deeper or lower into a demand area or reverse from here, This is dependent on the lower time frame. If lower time frame start showing signs of reversal, then this is an indication that prices are trending, Or it's respecting the demand area. We can target this high as the potential target. So this is for uptrends. So we covered briefly in previous sessions as well, So this is just a quick recap. And in a downtrend, you can see that it's the opposite. So in a downtrend, what we're looking for, it's clear successive lower lows and lower highs. So in a downtrend, you can see that the lows themselves are constantly broken, right, or constantly run, and they can be used as take profit targets for the shorts. Whereas the highs, this in a downtrend, right, prices might come back up to whip this high, right, but it doesn't close above this region. So as long as the downtrend is still intact, we should not be seeing price break and close above this region. Occasionally, we get a few whipsaws, right, where price wick slightly higher, right? Not in this example, but there are other examples where you can see that price might wick slightly higher than the resistance zone before it continues to the downside. So what's important to note in this downtrend, it's that in general, we can see that when price starts forming lower lows and lower highs, these lows themselves can be a constant or it can be a take profit target. More importantly, right, when prices are in a downtrend, what we can do, right, identifying support resistance areas. So you can see this zone where price tested as a support before it failed. So when price retests this region, we're not taking any immediate entry, but rather this whole leg itself pushing into this resistance area, you can again see clear higher lows and higher highs. So for that reversal, right, we need to wait for price to break to the downside before it shows that it's in line with the higher time frames direction. So with that in mind, right, you can see this example as well. If we were to just trace this, you can see again the previous support area, which price tested, and then it hesitated, or rather we are seeing a slight reaction here before price broke to the downside, and following which, right, we're seeing a rejection of this zone. Again, right, you can see this consolidation, this area, usually we will be able to identify a reversal pattern. So this reversal patterns would come in a form of double top or head and shoulders. Okay, so to cover more on that, right, I will just move on to reversal patterns, right? The two most common kind of reversal patterns that we see when price starts coming into this zone. So in fact, right, when we cover reversal pattern, you'll realize that these concepts are tied very closely to market structures as well. So I'll just explain a little bit more on that. Right, so now let's take a look at, so before that, right, one last market phase to cover, it's price in a ranging market. So in a ranging market, you see clear support resistance levels, right? A range that price traded within. Usually in this example, we're waiting for a breakout of this range. So this can be a break and close to the downside, right? I emphasize closing price is important. It breaks and close to the downside, and this region becomes a potential resistance area or supply zone, right? At the same time, if price breaks and close to the upside, then this region itself becomes a demand area. So in terms of these areas, right, what we want to be slightly more wary of is that you can see that lying on this zone, especially when there's a clear range, usually what happens is that we do see this whipsaws. So these areas, right, these are essentially liquidity zones, right? So the idea is that when price starts trading in a range, you have sellers coming in to sell at the resistance areas. So they'll put their stop losses slightly above this, right? And stop losses for the sells, right? These are essentially buy orders, because if you're having a stop loss for the sell, you're essentially buying back the position, right? So that's one. And the other, it's of course, right, for the breakout traders, they're placing buy stops here. So in anticipation that if price just starts pushing strongly to the upside, the buy stops will be triggered, right? And they can ride along with the move to the upside. So at these resistance areas, where we have a lot of buy side liquidity lying just slightly above, right, or essentially buy orders lying slightly above the resistance, and likewise, right, sell orders lying slightly below. So traders who are looking to buy at the support, they will put their stop losses, which are sell orders lying slightly below here, or traders who are expecting a break to the downside, right? And thus, in this example, then we're placing a sell stop in hopes that it will trigger it when price moves strongly to the downside. Okay, so this is the third type, right? This is a range. So essentially, you don't see a clear direction, right? You're seeing price trade within a support resistance level. Okay, so with that, right, let's move on to chart patterns, right? So in this example, right, we covered on reversal patterns. So the two main ones I want to cover, right, one would be head and shoulders, and the other it's double top. So for head and shoulders to be present, we have to see in this example, you can see that we need two things. One, it's a prior uptrend to be formed. So the reason why this is important, it's because head and shoulders itself is a reversal pattern, right? So which means that we're expecting price to continue to the upside, form a head and shoulders pattern, break the neckline before it continues, or before it shows that this is a potential end to the uptrend. So with that in mind, right, this is also the reason why a prior uptrend has to be formed, right? So over here, so that's one, right? So whenever you try and identify a head and shoulders pattern, you need to ensure that there's a prior uptrend form, right? So for head and shoulders to be valid, there are two things that we see, right? One is that we need the peaks. So we need the left shoulder and the right shoulder here, right? And of course the head, right? So the head has to be higher than the left and right shoulder. So that's one, right? And this pattern itself is not completed until the neckline is being broken. Now, this is extremely important, right? The reason why this is important and why this pattern is not completed until this is considered broken, it's because if there's a prior uptrend that's being established, right? For the zone, for this head and shoulders pattern to be valid, we need a prior uptrend to be formed. But for a prior uptrend to be formed, right? Recall we talked about market structures earlier. So in an uptrend, what do we have? We have very clear higher lows and higher highs to the upside, right? So this consolidation that you see over here, that is a head and shoulders, right? Previously, we talked about reversal of an uptrend. An uptrend, it's only considered for potential reversal once we see that price starts breaking the last low, right? Violating that low before the reversal. So you can see that in an uptrend, right? If this low is not broken, price just whips slightly below it, it's likely to continue much higher, right? Especially if it's coming into higher time frames demand. So this is also the reason why, right? When we apply the concept, right? When we talk about market reversal or market structures, right? We combine them with reversal patterns. You can see that the same concepts apply. In a prior uptrend, we have clear higher lows and higher highs, right? So for this head and shoulders pattern to be valid, right? This is a reversal pattern. We need price to break below the last low because this is an indication that there's a change in market structure and we're seeing a potential end to the uptrend, especially if prices are coming into a higher time frame supply. Okay, so that's one, right? So this pattern is not completed until the neckline is being broken and we have a projected target. So when we talk about projected target, essentially this projected target would be the distance between the head and the neckline. And so essentially the neckline, it's the last support region that we can find, right? So if you talk about, again, a bullish market structure, or we can just refer to this example, right, of what we have here to the left, you can see that this area, right? So if we were to mark out the highs and lows, you can see subsequent higher lows and higher highs. And this is the last pullback that we have before price continues to the upside. So this is the low, which also forms the neckline. So with that in mind, right, you can see that this neckline is only considered valid when price breaks and close below it, which comes in somewhere here, right? So this is small, but you can see that when price breaks and close below it, very often this neckline itself can be tested as a potential resistance area, right? And the projected distance, it's basically the distance between the head and the neckline, right? You project the same distance down after the break of the neckline. So in this example, you can see that this distance that we have, I'll name it, let's say X, right? So this distance X, when you project it, right, the difference from the neckline to the projected profit target, it's also the same. So if we're looking at 50 pips over here, right, then you can project 50 pips from the neckline down. Okay, so this is a potential profit target, right? But having said that, right, what we also want to understand from this example, it's that if you do have a projected profit target, right, this region, if this area, it's lying slightly below a key support zone, right? So for example, right, using the same example, you can see that you have a support area that price came in multiple times, tested twice here, right? So if your projected profit target comes in slightly lower, right? So instead of coming in at this point, right, you can see that if the projected profit target comes in here, slightly lower than the key support region, right, then one thing we want to identify when price starts coming into this zone, it's that we want to ensure that this area is accounted for. So even though the projected profit target shows that price could go much lower, we want to ensure that if there is a key support region that price interacted with multiple times, right, then this is a zone we want to more aggressively protect the position. Okay, so that's for head and shoulders pattern, right? The other pattern that we have would be on the inverse head and shoulder, right? So this is the opposite. So essentially this is found in the downtrend. And so likewise, right, in a downtrend, for a downtrend to be established, we need to see clear lower lows and lower highs, right? So this is a clear downtrend. You can see successive lower lows and lower highs. So we have a prior downtrend to be that's formed. And following that, right, what we have here is that price usually starts consolidating. Right, so you can see that price starts consolidating, forming new structure. And for an inverse head and shoulders pattern, right, we need the left shoulder to be higher than your head, right? And then we have the left and right shoulder, right? So this ideally, right, in the most perfect scenario, they are the same height, but in some examples, you can see that the head and shoulders might be slightly slanted. Sorry, the inverse head and shoulders might be slightly slanted, right? So in this example, you can see again, right, pushing down, right, this prior downtrend, you have a lower low and lower high. So again, right, if you look at it just purely from market structures perspective, this lower lows and lower highs, this is the last high that you have, right? So if I were to draw it out, it looks something like that. You can see this is the last high that you have. Price forms a neckline here, right? So this is the last high that we have. So this is also called our resistance region. So again, for price to continue to the upside, it has to break above the last high, because the converse is true, right? So if we're in a downtrend, you can see that this downtrend is intact as long as this high it's not broken, right? So we talk about it in various sessions. If price starts breaking and closing above it, right, this is an indication of an end to the downtrend. So using the same concept, you can see that this is what we have on inverse head and shoulders as well. So you have clear lower lows and lower highs to the downside, but once price starts breaking and closing to the upside, which is also called our neckline, right? Once it breaks and closes to the upside, right, then this is an indication that we could be seeing a reversal. Of course, right, one thing to note with this reversal patterns, it's that we need to ensure that prices, as much as possible, they are on the higher time frames demand region, right? So it can be on the support area on, let's say, the daily time frame, right? And you're observing these patterns on the 15 minutes or 1 hour time frame. So one thing to note with this is that this inverse head and shoulders, right, there must be some kind of trigger to show that prices are respecting the higher time frames demand, instead of just looking for just this pattern, right, single time frame. So we want to understand that if prices are coming into higher time frames demand region, right, and we're seeing these patterns here, right, then this is an indication that prices are respecting the higher time frames zone, and we're seeing that reversal. But assuming that you don't have a demand area here, right, and this is just price trading, you can see that often, right, with this inverse head and shoulders, price could just continue much lower to the downside or break the neckline before it continues much lower. So this pattern itself, right, it's useful, but at the same time, it has to be combined with market structure. It has to be combined with your higher time frames direction. If prices are on a higher time frame demand, right, then this pattern will hold more weight as compared to just looking at it randomly. Okay, so this is for inverse head and shoulders. So there's two things, right? Prior downtrend has to be formed. We need a break of a neckline for confirmation. Now let's talk about the profit target. So for profit target, right, this profit target, it's calculated by projecting the distance, essentially from the head to the neckline, right? The distance that we have, assuming 50 pips again, right? Then essentially we're projecting another 50 pips following the break of the neckline. So this is a potential profit target. So in this example, you can see that price went way beyond it. But apart from that, right, what I do want to highlight is that if we do have a key resistance area, right, so assuming that you can see that this area itself is a key resistance. Price came in, tested this region twice, right? So this was a major resistance that price respected previously. Coming into this zone, right, if you have a potential profit target that's lying slightly above it, you want to ensure that when price starts coming into this region, right, you're trailing the stop losses more aggressively on this. Okay, so that's for the inverse head and shoulders pattern, right? The next one that we want to look at is a double top. So this pattern itself is interesting because you can actually see this, right, even across the lower time frames. So essentially, whenever price does a reversal, you can see a clear double top pattern being formed, right? Be it on maybe the 5 minutes or 1 minute time frame, or even on the 15 minutes time frame. So in this example, you can see what we have here, right? So for double top pattern, we need two things, right? So one, we need a prior uptrend to be formed. So for prior uptrend to be formed, we need price to again form clear higher lows and higher highs. So if you're not familiar with looking at it, right, just based on candlestick patterns, you can also look at it in terms of line chart or prices in close. Essentially, you can see very clear bullish market structure here, even if I were to trace out the movements, right? So this is what we have. You can see higher lows, higher highs to the upside. And usually when price starts coming into higher time frames, supply region over here, right, we have two things. When price starts coming into the zone, right, it forms a rejection of here. But again, right, this first rejection that we have, what it creates is a structure. So it creates a structure for a potential target, right? So the first time price starts rejecting off this region, right, you can see that we have a prior uptrend that's being established. So this high itself, right, in an uptrend, this high usually serves as a potential profit target. Why? Because it's likely the price will come into a demand area here, right? And if the demand zone is being respected, right, the primary uptrend is still bullish. So the primary trend is still bullish. So there's a high chance that price will come in, test this zone, right, before we do see any reversal, right? So that's one. And the other is that if you take a look at it again in terms of the market structure, this is the last low that we have that's being formed, which is also what is often referred to as the neckline once price breaks and close below it. In terms of support resistance level, right, this is really nothing but just a support zone. It's the last low that we have that caused the pullback. So if we do see a reversal, you can see that price would come back into the zone and it targets the last high that we have, because in an uptrend, you can see the highs are often targets, whereas the lows are not violated. And so using the same concept, this is the last low that we have, and this uptrend would hold as long as this low is not violated, right? So price could just pull back, continue much higher to the upside, which is why it's extremely important that we need to wait for a break and close of the neckline before it can be considered a double top. If price does not break and close below the neckline, you can see that we could see a case like this where price just pulls back before it breaks to the upside, right? So in this example, right, it's common in a bullish pattern, right? Because we see the highs themselves are used as constant take profit targets. So again, right, the importance of breaking and closing below the neckline, because once price breaks and close below the neckline, this is an indication. Again, in an uptrend, you can see lows are not violated. So what happens if price breaks and close below it? This is an indication that we could be seeing a potential reversal or an end to this uptrend. Okay, so with this example, you can see that when price starts coming into this zone, right, two things. One, it's that you'll see price forming an equal high, right? This is the most ideal case where price starts forming equal high before it breaks the neckline. But in some cases, you can see that price actually wicks slightly above the previous high here, right? Which is also the reason why when price starts coming to a resistance area on the higher time frame, right? If you're in an uptrend's being formed, right? Price starts coming into this zone. We're not taking any immediate sells on these highs, because these highs themselves are weak. They can be seen as profit targets. So when price starts forming this zone, right, and you're seeing that reversal, it creates two things. One, it's that it has to come from a higher time frame supply. So either resistance area that price respected previously, and you're seeing this reversal pattern on the lower time frame, right? That's one. Or the other is to wait for a break and close to the downside. Once price breaks and close below it, right, this reversal, we can target the low of the higher time frames. So the region that caused the pullback. Right, so in this example, this is one here. So once there is a break and close to the downside, or break and close of the neckline, right, what we have following this, right, it's the potential profit target. So profit target, this can be projected using the difference between the top, which is the highest point, and the neckline. So again, if this is, for example, 50 pips, we're projecting 50 pips to the downside. So this region here, right? So you can see that this is a potential profit target, right? In the case where you get this order flow right, or the market structure, usually price goes beyond it. We do see a pullback into a resistance area before price continues to the downside, right? Again, for this potential profit target, you just want to make sure that to the left of the chart that we have, right, there's not a significant support zone. So if we're seeing a clear support region that price came and tested previously, right? So let's say if your support zone is here, you're seeing a sharp reversal of this region, then at this point, right, even though the potential profit target is lower, you want to ensure to be managing the trades more aggressively on the low. Okay, so that's for a double top, right? The next example that we want to look at, right, which is also the more common one, would be a double bottom, right? So this are just, I'm not going to go through all the reversal patterns, right? But these are the ones that we can actually observe, and also ties in closely with the market structures. Right, so in this example, okay, I do have a question, right? What's the stop loss after the neckline and the double top? So let's take a look at that, right? So for the stop loss, following a break and close of the neckline, right? Just looking purely at market structure, you can see again, right? The stop loss can be anywhere above this high. So this is one, right? So this is based on the whole structure itself, right? If you want to base it on the lower time frame, so for example, if price starts coming into this zone, it starts rejecting this resistance area here, right? You can actually not take an immediate position, but again, wait for the reversal. So just imagine, right, if price starts coming or pulling back into this resistance area following the break and close of the neckline, right? If this serves as a resistance, you can wait for the lower time frame reversal. So again, this whole pullback leg that we have, you can see this pullback leg on the lower time frame. If I were to expand this, this is essentially again a bullish structure. So when price starts coming to a resistance area, right, if it starts reversing, you can see a lower time frames reversal pattern occurring here. Then you can consider putting the stop loss just slightly above the resistance area, right? So this is with the idea that once this reversal pattern holds, right, we can target the low that caused the pullback, which is essentially this area here. And so if the lower time frame starts reversing here, right, you can target this low as the first profit target, where you shift the stop loss to break even. Okay, so I hope that answers your question, Mark. Okay, so this is for double top, right? So it's the same concept, right? When you talk about reversal patterns, right? Again, when this reversal pattern comes in, essentially what this shows, it's again change in market structure. So lower lows and lower highs. Once this is formed, right, we're not expecting the highs to be violated in the downtrend. You can see in the downtrend, right, we talked about it in previous slides. So usually when prices are in a downtrend, the highs would hold, right, and that reversal of downtrend really comes in when price breaks and close above it. Okay, so this is for the double top. Right, now let's take a look at the double bottom. So for a double bottom to be formed, we need a prior downtrend to be established, right? So again, clear lower lows and lower highs, right? So the previous move has to be in a bearish market structure. And what happens following that? Usually this area, right, price will start consolidating and forms a new structure here. So we have the first bottom. First bottom is the rejection, right? So in this case, right, you can see that the first bottom, there are two things, right? You won't be able to capture this because this rejection usually comes from, if it comes into a higher time frames demand, that's one. You can see that when price starts pulling back, this zone that we have, right? Ideally, when we're at this point, you can see it's still in a bearish market structure. Just observing the pullback leg itself, we can see that prices are still in a bearish market structure, still forming lower lows and lower highs, right? It could come into a resistance area here. Now what happens is that it then creates a second bottom here, the new structure. Right, so once this pullback is being formed, this whole leg is being formed, it creates two things, right? One is that it creates our short-term profit target, which is this high. So I know that if price starts coming into the support region that we have, this area, which was caused when price did a first rejection, right? So when price starts coming into this zone over here, my lower time frame is showing a sign of reversal, right? So you can see that this whole leg that we have, let me just put this in a different color, right? You can see this whole leg that we have, circled in red, right, pushing into the support area, you will be seeing this structure on the lower time frame. So again, right, if price starts reversing, changing market structure here on the lower time frame, what this shows me is that I can target this high as a potential profit target, right? Just the shorter term trade, understanding that the overall direction is still bearish, right? So if price does a pullback on this zone, right, we'll target this region over here, this high, because what this shows me is that this high itself, right, did not actually break the previous low that we have, right, given that the lower time frame is starting to reverse. So if the lower time frame starts changing market structure, you have a high that can be used as a profit target. Okay, but of course, beyond that, we need to wait for a break and close of the neckline, which is why if we're looking at it purely just from a chart patterns perspective, right, this double bottom, it's not confirmed until price breaks and close above the neckline. So when price breaks and close above the neckline, this is what we have here. You can see that this region, right, following a break and close to the upside, right, this is a sign that this whole bearish downtrend that we have, again, if the downtrend is still intact, we are not expecting price to break above the last high, right? But if price breaks and close above the last high, just from a market structures perspective, you can see that it's a potential indication of a change in trend. And this is what we're seeing here, which is why it's important that price has to break and close above the neckline, right, for further move to the upside. So once price breaks and close above the neckline, which really comes in over here, you can see that it does a pullback back into this zone, right, potential demand area. So there are a few ways you can identify the demand zones, right, we covered in earlier sessions. If you look at it just based on interactions between the previous candlesticks, right, looking at how price interacted with supply as a support and resistance areas, that's one. The other is to look for a market structure. So imagine when price starts forming clear higher lows and higher highs, usually one demand area that you can do, right, is or you can identify is taking the extreme of this region. So the whole area that caused the move up and also break of structure. At the extreme, essentially the last candle over here, right, can be served as a demand zone. Right, so that's one, right? The other, it's of course looking at areas of consolidation. So we talked about it in terms of market phases earlier, right? So how prices were trading sideways. And following the break of structure, when price breaks and close to the upside, this region serves as a potential demand, right? So that was covered in one of the market phases, right? One of the three, we talk about uptrend, downtrend, and sideways. Right, so when markets are trending sideways, right, creates a demand region here. Now with this concept in mind, you can see that when price starts pulling back into this zone, right, this area creates a demand. Now, one thing you might want to ask yourself, right, how do you identify this on the higher time frame, right? So this whole support resistance area that price traded within a prolonged period of time, right, this is essentially what we call a doji, right? So you can see a lot of uncertainty, price respecting the highs and lows, which is essentially your support resistance level, stayed in for, let's say, a day, right? So this would be, let's say, a doji on the daily time frame. And so when price starts trading within a range before it breaks to the upside, then usually what happens is that on the higher time frame, it creates a doji. before we see a strong break to the upside. So in this example, we don't really see it here, but what you can see is that there's a range, this area, right? The price consolidated within. If we shift to a higher time frame, right, you can probably see a doji at this region, right, before price breaks and close to the upside. So you can see that when price starts pulling back into this zone, right, we're not again taking any immediate entries from here, because there are two things, right? Price could just, how do we know whether price is going to stop here, or if price is going to continue much lower? The price could come in, it could come into this region over here, this demand area for that matter. So whenever price starts coming into this zone on the lower time frame, right, you can see that this region over here, again, we need a change in market structure. So an N, right, you can see this move to the downside. Again, if I to just highlight market structures, you can see this zone, right, clear lower lows and lower highs to the downside. You can see this region, right? And this is the last high that we have. So you can see what happens here. Price break and close to the upside. And then we have this doji, essentially that caused a pullback back into this the last high that we have, which price break and close above, right? Before it continues much higher. So when you are seeing a pattern like that, right? Price coming into a higher time frame or coming into the previous demand or consolidation over here. And this pullback leg, the most recent leg, right? Pushing, that's causing price to push into this demand area, right? If this pullback leg is showing signs of reversal in the form of how this lower lows and lower highs, right? It's actually breaking to the upside and closing to the upside. And then this is an indication that prices are respecting this demand area. And you can target this high, which is causing the pullback. Okay, so I hope that this is clear so far in terms of how we can actually combine, right, the different market structures. And so if you take a look at this zone, right, you can see this area, this is a clear sign, right? When price starts forming, you can see very clear bearish structure, lower lows and lower highs. If I put this in a line chart, you can see that as well. And then what happens after is that price breaks and close to the upside, right? And that's an indication that this whole downtrend that we have, right, it's reversing, and now we can target this high. And that's, of course, on the assumption that prices are in an uptrend, right? This price has to be in an uptrend because one, right, we're seeing a break and close of the neckline and seeing a break and close of the previous high. So there's a change in market structure already from the prior downtrend up to this move, right? And you're seeing here, even just with the most recent move, you're seeing clear higher lows and higher highs. So beyond that, of course, price could just continue much higher, but this itself, right, this is a realistic target. You can see that when price starts pushing into this zone, right, the most immediate reversal here, you can see when price starts reaching this region, we're seeing a pretty sharp reversal before it continues much higher. So this region itself, right, this is also the reason why if you are taking any partials, right, this high, it's very useful as a target, right? Beyond that, right, you can consider trailing the stop losses much closely because this pullback itself might have been trailed out, right? Might have hit a trailing stop before price continues on the upside. We don't know how deep of this pullback is. It could come into a higher time frame, right? Let's say your 1 hour demand region or even 4 hours demand. But if you're trading on the lower time frame, let's say the 15 minutes, right, this pullback could be erasing most of the gains. Okay, so that's for a double bottom. Right, now let's take a look at the other setup, right? So let me just hop on to the charts. So we'll just go through a few examples. And at the same time, right, if you have any questions, just feel free to type them under the questions chat. So let me just bring that up. Right, so if we take a look at what we have here, and let me just bring up an example, right? Let's just say, okay, let's just see on gold, right? So this is what we have on gold, right? So let's take a look at that. So if you see on gold, let me just bring this. Let me see if I can form a new share. Okay. I hope you can see my screen. Okay, so you can see on gold, right? So on the higher time frame, first we can see that prices are in you're seeing a breakout and retest of the trend line and also rejection of the resistance area. On the weekly, we're seeing this descending channel being formed, right? At the same time, prices are coming into this potential demand area that caused the pullback. You can see this region. So prices are coming into this demand region here. If you're on the daily time frame, you can see that this zone, right? So this whole move to the downside, prices has been in a bearish market structure, was forming lower lows and lower highs, right? So again, for any signs of reversal, we need to see the lower time frame turn bullish first. So that's on the daily, right? This whole pullback leg that we have. If we move down to the 4 hours time frame, on the 4 hours, we have a resistance area here, which price came in, tested as a support previously, this zone, and then broke to the upside, right? And just within this area itself, you can see that when price was held as a support, right, we can see this whole move. So we have a push to the upside, price did a pullback into the support region here, right, this area. Now, this whole move that we have, you can see that when price did a pullback in the downtrend, it created two things, right? One is that this region, it was a previous support area. So when price starts coming back into this area, right, and it fails to break and close below this, then it creates this as a potential target. So just focus on this whole leg on the lower time frame. You can see this leg that we have on the lower time frame, right? So let's say if I move on to the 15 minutes time frame. So you can see that this region, again, we're seeing that change in market structure, right? So this whole leg, okay, let me just give me a moment. I'll just highlight the leg so that it's easier for us to identify which leg is this. So I realized that when I circled it, right, on the lower time frame, it's very choppy. So let me just highlight this, right? So this is the leg that we're focusing on, the one in blue on the 4 hours. This is the pullback leg. So what we're waiting for, two things, right? We're waiting for price when it comes into this zone, right? If it turns bullish, there's a bullish market structure being formed on the lower time frame. We can target this high, which caused the pullback. Okay, that's one. But beyond that, right, that's not something to consider, because that's what we have, right? On the lower time frame, you need to understand that when we're on the higher time frame, right, this whole thing is still bearish. Prices are still in a bearish structure, lower lows and lower highs. This is the last region that we have, right? So if you're talking about double bottom, right, this is essentially the neckline. So at this point, right, if we're at this point in time where we're seeing this move, right, if we're waiting for any double bottom, this is the neckline. So you can see that price did not actually break and close above the neckline, which is why we emphasize again, right, it's very important that if we do see any double bottom pattern, we need price to break and close above the neckline for it to be considered a reversal pattern. So in this example, right, this is an example of a double bottom that it's not even a double bottom pattern to consider, right, given that we have a prior downtrend, but there's no close and break above the neckline. But right, just highlighting this, you can see that this whole region, if I move down to the 15 minutes time frame, so the blue leg that we have covered, right? So this blue leg, this pullback leg, it's basically the 4 hours region, right? So price pullback into demand area, you can see that the change in market structure really starts happening here. You can see this whole leg that we have, right? If I put this level in close, so this whole blue leg that we have over here, essentially this whole move, right? You can see what we have here. Oops. So this region, you have lower lows, lower highs, lower lows, lower highs, right? And then price starts breaking to the upside. You have a break and close to the upside, right? So it forms equal lows, I believe. Right, let's take a look at this. Yeah, so price did form some kind of equal low there. And then what happens after is that you can see this area, this high. So the first time price came in, right, form equal low over here, this range. So still in a bearish market structure, given that prices are still forming this, right? So you're seeing this lower lows, lower highs, price forming this low here. But this is still the last high that we have. You see the first time, right, price came into this region, it broke and closed to the upside. Once there is a break and close to the upside, which is basically this candle here, this area, right, this shows that on the lower time frame, it turned bullish. Why? Because there's this whole pullback leg, it created a target here. At the same time, right, this area, you can see that this whole structure on the lower time frame, right, turned bullish because price no longer holds, right? It does not continue forming lower lows and lower highs. You're seeing a break and close of the last high, which is this region. So break and close to the upside. So this, it's a potential target, essentially this high, right? Of course, beyond that, price actually went slightly further, but beyond that, right, this is in a downtrend. So we can leave some open position, but just consider trailing the stop loss more aggressively when it comes beyond this point. Okay, so let's take a look at what we have now. So if you take a look at where we are right now, you can see that yesterday, right, there was this consolidation, this whole region, I believe on the 4 hours, right, it's probably clearer. So this whole area here, we can see that price came into the zone, right, tested the resistance region here, this high that we have. I believe it's here, right? So this high that we have over here, right, and price starts coming into this zone, right, a demand area. So we highlighted this area on the 1 hour. You can see this region on the 1 hour time frame. This area, yeah, so it's probably this region here. Yeah, so this is the 1 hour. So you can see it highlighted this region on the 1 hour time frame, which is based on this extreme of this candle, right? Given that price came in. So when price starts coming into this zone, right, which is essentially this candle here, it created two things, right? Created this high that can be a profit target. Oh no, sorry. When we covered the move yesterday, it was here. So this zone, it was here. Let me just backtrack this. Bottom, we covered it yesterday. Oh yeah, it was here, somewhere here in time. So it was this region actually. So this was the demand area we highlighted, right? So this was the region, right? We have a high. So you can see that price actually pushed out into a resistance area. But beyond that, right, we're in a downtrend. So beyond that, right, this primary trend takes over if it continues much lower to the downside. So this is an example of how we can use this pullback, right? So all this potential pullback can serve as profit targets. But beyond that, right, when there is no more target, right, this is like a destination. So when we don't know where price is heading towards, right, then it reverts, right? The primary trend is still bearish in a bearish market structure because price did not actually break and close above this. You can see it did not actually break and close above it. It just wicked slightly higher beyond this high, which is the profit target, and also coming back into a resistance region that we have here. Okay, so I hope that this helps in terms of how you can actually navigate market structure, right? You can see even with the most recent move, right, prices are still in a bearish market structure. The last low that we have, which price breaks and close below, right, is this region here. You can see lower lows and lower highs, right? Price break and close to the downside. So this is the region, right? So this is the last area that we have. Even if you look at it in close, you can see just the subsequent lower lows and lower highs. Right, so prices on the lower time frame, it's still bearish. You can see here, right? So any subsequent pullback into a resistance region. So let's say if price starts pulling back into this zone, again, this whole pullback leg itself, it will cause a bullish structure. So if price starts coming into higher time frames, supply, right, or resistance region, this whole pullback leg, right, we'll see signs of reversal, right? Even if you take a look at where we are here, right, so you can see that when price starts pushing into a resistance region, this area that we have over here, essentially this whole move, right, coming into reaching this target and coming into the higher time frame, the 4 hours supply that we have, right, based on this previous support zone, you can see that just focusing on this whole leg that we have here, this whole leg, right? If I go down to, let's say, the 15 minutes or the 5 minutes, you can see this structure, right? So when price starts coming into this zone, right, what happens is that price starts forming this bearish structure, right? Lower lows and lower highs. You can see this zone, right? So price broke to the downside. And then what happens subsequently is just this whole region, this whole area, right? If I put this levels in close, again, you can see lower lows, lower highs, right? So we did not need to don't have to take the immediate reversal, right? Because at this point, we wouldn't have known whether price would just continue much higher or it's going to break the downside. So the break and close comes in when price starts breaking and closing the low of the candle. Excuse me. So, okay, I have a question, right? On the 4 hours chart, it did not form a double top. So let's take a look at the 4 hours. Okay, so where are we here? You can see that this 4 hours chart, okay, which is the double top, right? So in this example, if you look at this here, right, I would not consider this a double top because for a double top to be formed, you need a parallel uptrend to be established first, right? And this is not an uptrend. So again, right, double top, you need clear higher lows and higher highs, price starting to break and close below the neckline. So in this region, it's not, right? If you focus on this whole point, this whole area here that we have, you can see that price, again, it did a pullback. So this zone that we have here, if you move down to the lower time frame, you can see that this region that we have here, right, this forms a double top. So what we have, okay, maybe let me just clear this chart up so that it's clearer, right? So two things to note, right? Let me just remove all of this, right? So the only thing I want to highlight here within this is this supply region, which is basically this move, right? So this area. So you can see that, let's push our focus to this area here where price actually does a pullback. So it forms a pullback and it starts pushing into this resistance zone that we have, right? And more importantly, it also swept the previous high that caused the pullback, which is essentially this region, right? So once this target is reached, price starts coming into this zone. If you go to the lower time frame, you can see that it actually formed a double top here. So this area, so you can see this area here, right? So price pushed into this zone, it created a new high. So again, clear structure, right? So higher lows, higher highs, price did a pullback into this zone, it formed a new low, and then subsequently did a pullback before it broke to the downside, right? So if I put this level in close, you can see, right? So this is the first top, second top, right? you can't really see it in close, but you can see that this high, if I move back, you can see that this high, right, price actually wick, and it's near this region. So that's the reversal. And then this is your neckline. So price break and close to the downside, did a retest of this zone, right? So when this happens, this region over here, it created this whole area, right? When price starts forming a double top, recall that on the 4 hours, so if I move back to the 4 hours, you can see that this whole area that we focus on, right, price did a pullback from here. So this is the low that we have. Price did a pullback into a resistance region that we have over here. So this is the low for a potential target on the higher time frame. Okay, so this is the 4 hour zone. So if a 15 minutes starts turning bearish from this point over here, you can see that this 15 minutes starts turning bearish over here, right? So we wouldn't have caught this move because we need price to break and close the neckline. You need a confirmation. When price breaks and close the neckline, it tested this as a resistance, right? And it created this 15 minutes region, which is, the 4 hours region, which is the 4 hours low, right? So this region was identified from this move. You can see this low. It's essentially this low. Maybe I'll just put this in a different color so it's easier for us to see, right? So let me just put this here. So this is the low. This is the 4 hours low. This is also the last low that we have that caused that pullback. So you can see that beyond that, right, when price starts reversing, when it comes into higher time frame supply region here, right, starts reversing, forming a double top, and then break and close below the neckline, you can see that this area becomes the target. So what happens, right, when price pulls back into this zone, on the lower time frame, right? It created it's what we also call resistance, support and resistance level. It failed. Then retested, right? This is an entry targeting this move here. But once the target has been reached, right? Notice what happens when the target has been reached. When price actually pushed into this 4 hours low, right? Which is from this zone, right? When price reaches this target, right? We're seeing the aggressive move, right? That pull back to the upside. So if you're trailing it, right? This could have been trailed out. That's one. Right, so price actually did a pullback, and part of this pullback leg, right, if you move back to the higher time frame, it's just that slight pullback before price continues much lower to the downside, right? But at this point in time, when we did see that pullback, so when price starts pushing into the zone, and you're seeing that reversal on the lower time frame, right? When price breaks and close to the downside here, then it created this as a potential target, right? So this is a potential entry. But once the target has been reached here, right, you can see that this is like when the target has been reached, you don't have, when price did a pullback, right, it does not create any target. So which is why it's important that as much as possible, we need to know where prices are potentially heading. And that's formed by the zones, right, or the regions that caused the pullback previously. So if you're seeing a bearish structure, again, lower lows and lower highs, when price starts pulling back into a resistance area, right, it creates this as a potential target, which is essentially what we're seeing here, lower lows and lower highs on the 4 hours. You can see here, lower lows and lower highs, right? And price did a pullback. And this whole pullback leg itself, when you're seeing lower lows and lower highs, this pullback leg forms the target. But once the target has been reached, right, at this point, right, this zone, right, we wouldn't know where price pulls back into this region, this area here, right? So you can see that when price starts pulling back this whole zone, right, if it comes into a supply region that we have, right, again, the lower time frame has to start reversing. So when price starts reversing from this zone, right, then this region that caused the pullback forms the target. Okay, so I hope that that helps, right, in terms of whether, in terms of answering your question. Right, so yeah, so if you do see on the 4 hours, right, when price does a pullback on the lower time frame, if this is the 4 hours resistance on the lower time frame, you will be able to see the reversal. Okay, so with that, right, I believe we have no other questions, right? If we have no other questions, right, that's what we have for today. I do have an announcement to make, so let me just bring this up shortly. Right, and at the same time, right, for those of you guys who want to join our sessions, you can actually go to vantagemarkets.com/webinar. So before this, right, let me just show you the website. So if you want to join us via Zoom, right, you can just go to vantagemarkets.com. On our website, you can sign up for it, right? Education and tools, educational webinars. Just scroll to the bottom, you can see the schedule as well as the topics that we will be covering. So for tomorrow, we will be covering specifically on Aussie dollar. Right, so that's one. So be sure to sign up for the sessions, come with your questions as well. So yeah, that's for the analysis, right? If I have no other questions, right, if you have any other questions, just feel free to type them under the chat. I hope that this session is clear in terms of how it helps in looking at market structures across different time frames. Okay, and one last thing, right? So we do have a giveaway. So let me just bring this slide up very quickly. Oops. Right, so this is an exciting piece of news for our valued Vantage clients. You now have an incredible opportunity to win a fully paid trip. It's about what is worth for USD $4,000 to the UK to attend the prestigious McLaren Gala dinner on the 4th of October. The winner will be treated to a delightful 3-course meal and have the privilege of meeting the drivers from the Neo McLaren Extreme E team in a private meet and greet session. So making the occasion even more special, we have Vantage Global's ESG ambassador, Supercar Blondie, will grace her presence. The event with her presence. So as a cherry on top, the winner will get an exclusive tour of the remarkable McLaren Technology Center. So how do you participate, right? All you need to do is follow the Vantage Markets Instagram account and submit your details via a form by 17th September 2023. So this is the link to the form, right? So you can just scan the QR code. And one lucky winner will be contacted via email by 20th September 2023. Best of luck to you. Okay, so this is our giveaway, right? So if you're interested to join, please do scan the QR code. I'll just leave this on the screen. And yeah, if there are no other questions, that's what we have for today. Right, so for tomorrow, we will be covering a live analysis on Aussie dollar. So do sign up for that session. So with that, right, that's what we have, right? You're most welcome, Jamilu. Okay, so that's what we have for today, right? Thanks everyone for staying with us till the end. Have a great trading day ahead, and we will catch you guys again tomorrow.